traders, welcome to our today's video. Jean here from BecomingTraderFX.com, and in today's video you will learn our high probability trading setups based on our trading strategy, based on our trading style. So I want to share this video with our followers here on the YouTube, and if you are not familiar yet with our trading style, make sure you check my YouTube channel so you can get a brief understanding how we approach the market. And in this video you will learn more in depth about our high probability trading setups. So make sure you check this video few times if necessary, because I will go over high probability trading setups in the next few minutes. We will go over the steps, over the hard time frames analysis as we usually do. So make sure you take notes, because if you are committed to succeed in trading, if you have passion for your own trading, if you have clear goals about your own trading, and if you want to really make it work, if you want to succeed in trading business, if you want to successfully trade for yourself or for clients, or you want to get funded, or you want to manage investors' capital and so on, if you will master those steps and this trading approach, you can really achieve all of those trading goals I just mentioned before. So don't be just one of those traders that just jump from one strategy to another, and don't be one of those traders who are not consistent with their own trading process. Don't be one of those traders who are not, accountable to the progress, who don't actually take any responsibility for it. And make sure you change that. And if you will master this trading process and steps in this trading video right here, I'm sure you will be successful on the long term. Of course, with the patience, of course, with the discipline, of course, with using your own trading journal and trading plan, you can make it work. So now let's start with GBpusd. We will go over the trading setup, high probability trading setups we had last week. One is here, and of course also another one here from yesterday, from the 13th June, and the first one, as I said, from the 25th of June here. So we will start with the daily time frame first. So why we focused on the long trading setups only on the GBpusd for the last couple of days here? Why? Because just by looking at the time frame here on the daily, you can see, just by following the price, you can see that market was in this bullish structure, and any retracement was quickly, as you can see, bought and price pushed to the new high. So we had this move higher, retracement, new high, retracement, new high, retracement, and not that this retracement was just bought and we had this bullish, clearly bullish structure, meaning that we want to focus on long trades. Not just that, but what we also noticed here, if you pay attention, if I remove those lines, what do we see here? You can see that price retraced, it formed this swing low here on the 19th of June, and on the 23rd June, here on Monday, what do you notice? Price spiked at the same swing low. So if this swing low is our sell side liquidity, price tapped into this hard time frames sell side liquidity, price bounced to the upside, and as you can see, the sell side liquidity was taken. So if sell side liquidity is taken, then that means that there is a high chance that price will try to move into opposite direction, into at least our buy side liquidity level. So market is always moving from one liquidity level to another. So if price took this sell side liquidity, as you can see, this spike, and closed bullish, then there is a high chance price will move towards the next buy side liquidity. So you have to check the left side of the chart, because in trading you have to always compare the right side of the market, the right side of the chart, and the left side. So what do you see on the left side? Where are the next buy side liquidity levels? We just focus on previous swing highs. Where do we have the most recent swing high? We can all agree that we have the most recent swing high here. So this is our buy side liquidity, the most recent buy side liquidity. And if we even zoom out, where do we have the next buy side liquidity level resting above those recent highs? If you just zoom out, you can see that we have the next recent highs, not just here where you have the most recent high here, but we have also the major top up here. So this is also what we can call a next buy side liquidity. So we just say this is the next buy side liquidity, and if the market took this previous swing low here, then of course there is a high chance that the price will try to navigate towards the next buy side liquidity level here and up there. So that's why we just focused on potential long trades for the last couple of days here, with in mind that price can lean towards those next buy side liquidity levels on the hard time frame. Now this is everything we had to know from the daily time frame. Then we switch to the 4-hourly time frame. So we know that from the daily time frame we want to focus on long trades, and there is the high chance that price will try to navigate towards this buy side liquidity level and also that one. And with that in mind, we focused on 4-hourly time frame, and we saw what? We saw bullish structure. So same thing as on the daily, we want to focus on the highs and the lows. So as you can see, after price took this sell side liquidity on the daily, price was just pushing to the upside. As you can see, price broke this short-term high. We had this move higher, retracement, move higher, retracement, and so on. So because at that point of time here, if you just focus on this first leg, what do we see here? We have bullish structure, this bullish leg up higher, the bullish structure. So that means that ideally we want to look for long trades. So in this case, we had this swing low, price pushed to the upside, made a new high, and ideally, of course, when you're looking for a long trades, ideally the higher, let's say, probability setups are when you have the price in the discount area. So if price, let's say, moves, for example, 100 pips to the upside, ideally you want to be looking for long trades when the price is not in the premium, when the price is right at the tops, but when the price is in the discount. So we have a premium, we have the discount. That means that discount is price is below 50% of that move higher. So for example, if price moved 100 pips to the upside, ideally you will want to look for opportunities in the discount area below 50% of that move. So 50 pips or more below that price level. But sometimes price is just too volatile, and in this case those retracements will not happen, and price will just move higher, retraced a little bit, and then push to the new highs, in this case when we're looking for long trades. So price will not even reach the discount area, but we have to still find reasons to participate into that potential leg up higher continuation if it makes sense based on our strategy plan. So in this case we have swing low here, we have swing high here, and on the way to the upside what do we see? We see bullish imbalances on the breakout to the upside. As you can see, bullish imbalances between 3 candles, meaning that price is strong, price is confirming this bullish move to the upside. So in this case, any retracement towards those imbalances can be viewed as an opportunity to participate into potential continuation. So if you have bullish imbalances here, in this case, then of course we can look for lower time frames opportunities, such as 1 hour or 15-minute time frames, in order to participate into next leg up higher. Some traders even use the 5 minutes chart. So totally depends on your trading plan. But anyway, let's go back to our example. So let me remove those lines. So on the way to the upside, we said we have bullish imbalances. So, oops, let me redraw it here. So we have bullish imbalance here between first, second, and third candle. As you can see, this displacement, this imbalance. So any retracement back towards those levels can be viewed as an opportunity to look for possible continuation, possible bounce into the new highs, right? So sometimes you will have just imbalance, this fair value gap, as we call it, alone. But sometimes you will have even another extra, let's call it confirmation, extra step, and that is you will have liquidity level within. What I mean by liquidity level, you will have previous swing low or swing high, depends on what direction you're looking for. In this case, for longs, you will have old swing low within the same imbalance here. So just by looking at those areas here, what do you see? We have this swing low resting within the bullish 4-hourly fair value gap zone imbalance. So this is just an extra confirmation. So if we extend this level, what do we have here? We have this liquidity level, the previous 4-hourly swing low. We have bullish fair value gap zone here. And we have also, so we have two factors. We have fair value gap zone. We have previous swing low, liquidity level. And that means that if price will come back to those levels, if price will sweep into those levels, we can look for possible lower time frames shift in order to look for long trades. For that, we use the lower time frames. So as you can see here, what do you see? We have, as we said before, we have fair value gap zone, we have this previous liquidity level, and market, as you can see, tapped into those levels. So we go to the 15-minute time frame. So on the 15-minute time frame, what do we see here? This is our liquidity level. We have this bullish imbalance. We have also Asian session range low swept, as you can see. Once the London opened, we had price moving towards this hard time frames imbalance and liquidity. And once the price swept those areas, we had structure shift to the upside. We had price moving higher, confirming that bullish move with bullish fair value gap zone imbalance. And on this confirmation, you can look for long trades. You can either enter on the confirmation of this imbalance, fair value gap zone imbalance, or you can even wait for a retracement back towards the fair value gap zone and discount area on the 15-minute time frame. in order to look for longs. In this case, you will be targeting at least 1-to-1 in terms of risk and reward ratio. You can target the highs of the day. So we have highs of the day here. You can even target the previous day's highs up here if you want to have bigger risk and reward ratio. Or you can even target the major higher time frames buy side liquidity, in this case up here. So in this case, if you are looking for long here at confirmation of fair value gap zone, your stop loss will be below the structure, 20 pips, and you'll be looking for 1-to-1 in terms of risk and reward ratio, at least 20 pips for 20 pips, if that's your target. If that's not enough, if you have different trading rules in your trading plan, or if you want to aim for more, you can go for almost 2-to-1 in terms of risk and reward ratio. So you'll be risking 20 pips for 40 pips. Or if you aim for hard time frames target, in this case your target will be 140 pips. So you can do the math if that's what your trading plan is saying. Now this is how you can look for opportunities on the markets on the daily, weekly basis. Now this is example from 25th of June. Now let's go also over to the example from yesterday on the 13th of June. So after price made this leg up higher, what we also noticed, we had same thing. We had same thing yesterday. So this is the 13th of June. We had bullish structure on the 4-hourly. We had fair value gap zone, and we had also liquidity, the sell side liquidity level here, the previous swing low from 27th of June. So same thing as we were looking here, we are looking for another long setup on the lower time frames here in order to target either those 4-hourly highs up here, or even up there. So same thing as I explained here on the first setup up here, we do the same thing on the setup from yesterday. So this is what we were looking for on the GBP/USD yesterday on the 13th of June. You go to the 50-minute time frame again, and if you compare it with the characteristics and steps from this level, from this setup, you have the same thing up here. You have Asian session range. So when the London opened, we had bearish structure. Price took this 4-hourly sell side liquidity level, same thing as we had here. It tapped into this bullish 4-hourly imbalance, the fair value gap zone, same thing as we had here. And once this level was swept, we had bullish structure shift to the upside with confirmed fair value gap zone on the 50-minute time frame. We had confirmed this structure shift on the 50-minute, and we had also even a retracement. So if same thing as we said before, if you're looking for long trade on the fair value gap zone here, you can go for 1-to-1 in terms of risk and reward ratio. Your stop loss will be 32 pips, and you'll be looking for 1-to-1 in terms of risk and reward ratio, targeting the highs of the day and the Asian session highs, or even higher, the hard time frames buy side liquidity levels. If you will look for a retracement and for better entry, your risk and reward ratio, of course, could be 1-to-1 or even more, depends on your strategy and plan. As I said, make sure you review this video again a few times and just follow the steps. If you can, and if you're able to follow those steps consistently on day-to-day basis, then you'll be successful. If you can execute those steps, if you can execute those trading rules with the discipline, with the patience, and with the right mindset, then of course you'll be successful. And of course, if you will use trading journal, trading plan consistently on daily, weekly basis. So thanks for watching. Hopefully this video is helpful, and we catch up soon. Take care.